Hey guys, here's a quick short video. I'm trying to reach out to all the viewers to kind of gather some information. What do you guys think is a good way to hedge the markets? Currently, the CNN Fear and Greed Index seems a little bit inaccurate. It says it's neutral, but right now the entire S&P 500, QQQ, Nasdaq, they're all-time highs, and it seems like we need another dip, right? So if you just look at this moving average, we're way above moving average. And the fear and greed, I think we're in extreme greed right now. Everybody's buying up all the IPOs. Everyone's buying up any IPOs being, listed in on the Robinhood app for IPO access, like Figma, Gemini, Circle. It seems like none of these IPOs have kind of lost people money. So we're in extreme greed and FOMO right now. Would the VIX be good for you guys to hedge, or what do you guys think in terms of hedging and selling shares in capital gains and paying, 30-40% in taxes? I want to figure out a way to hedge out my wins in stocks like Robinhood so that I don't have to pay that tax by selling it for capital gains. Is there another way besides buying puts? Because buying puts is expensive relative to, buying maybe a long position on a short ETF on Robinhood, maybe. I don't know. I'm thinking about ways to do that, hedge out of the market, becoming market neutral in case the market reverts back to a lower price to earnings ratio for the overall S&P 500, sitting at like 30 to 25 price to earnings, going down to 20 maybe, given a pullback. Right now we have a government shutdown, so we're not getting any of the job numbers this week as of October. So we need to figure out, once those numbers come out after the government resumes, if it's bad numbers, then market will take a dip. So it's good time now to hedge out any of the market beta in your portfolio. Looking at this website right here, the Buffett indicator, by currentmarketvaluation.com, we see that we're 217% above the annualized gross domestic product of the U.S. In comparison to the U.S. stock market value. So we're about two times the value of the gross productivity of U.S. companies. So we're very frothy right now. And if you look at this chart here, we are already plus 2 standard deviations. In fact, we're above 2 standard deviations over the market value to GDP, which is the old time we've ever been. So that's why I'm very concerned and want to hedge out of the market. I would love the commenters in viewing this channel to comment. Let me know what you guys think about hedging out of the market and the best way to do it. The best way to do it without incurring capital gains tax. Next thing to look at, the final thing to look at, is FINRA margin debt. So, as you guys know, during April, margin debt hits a little bit low for the year at 850. But understand that that was during the Liberation Day, where people kind of had to cover their margin because the market took a dip. Now we're back to euphoria and greed, where after April tariffs, people forgot about it, kind of. Well, they don't care about it. And now we're at all-time highs ever for FINRA margin debt. So margin that you guys borrow from any brokerage firm, we're at all-time highs. So it's another cause for concern, because if we have a 10% drawdown in the market for the S&P or Nasdaq, everybody's going to get hit because they're very highly levered in terms of margin debt. And then that facilitates another sell-off. Well, anyways, that's all from me. Please leave a comment. Let me know how you guys are thinking about hedging out from the market without incurring capital gains.